The US dollar has dropped over 4.3% this month, marking its worst decline since November 2022 and one of the biggest since 2000. Combined with a 3.2% fall in March, it's heading for its worst two-month period since 2002. Analysts worry Trump's inconsistent tariff policies have hurt confidence in US assets.
Trump tariffed, he untariffed, he re-tariffed, and he partially untariffed and said, I could flip that again. All right, that's a flip-flop. So how do you invest money and have a long-term strategy when the rules are changing almost daily?
French Prime Minister François Bayrou warned on April 15 that Trump's tariffs have eroded global trust, impacting the world's reserve currency and challenging France's public finances.
President of the United States has unleashed a storm whose consequences will not stop soon by giving the go to a global trade war without warning, from one day to the next, striking with unimaginable tariffs, first its Chinese competitors, then its closest allies.
Some analysts think tariffs might raise US prices, keeping interest rates high. Others believe Trump's unpredictable actions are deterring international investors. There's speculation that China is selling US bonds to counter Trump. However, Trump believes the dollar will strengthen long term.
You're talking about the value of the dollar, which is what I'm talking about. I think the dollar is tremendous. It's going to be stronger than ever.
Rebuilding trust needs Trump and China to reverse tariff hikes and for the US Congress to address the deficit. It's a pretty big ask considering the hardening of positions.
China is the most imbalanced economy in the history of the modern world, and they are the biggest source of the US trade problems. And indeed, they are problems for the rest of the world, because what we've seen is that as the US announced the tariff wall last week, many of those goods have already started flooding into Europe.
In the near term, no fundamental factors suggest improved investor sentiment, and US administration rhetoric offers no optimism for a dollar recovery. The Economic Brief, DD India.
Well, Dr. Amit Kapoor, how much of the US dollar's value is dependent on the Fed policy and how much of it is dependent on world trade?
I think if you really talk about economies per se, like the biggest factor which defines a currency is the trade that happens, and trade in terms of the innovation capacity, the productivity that a country has. The Fed policy, of course, has an impact, not that it's not going to be there. But when we say trade is one of the most important factors, and if you really look at the strengthening of dollar over a period of time, it was all driven from the trade resilience or the global free market system that actually got created after the rise of the Bretton Woods or Bretton Woods organizations in 1940s. And what we are really seeing now is that with the whole world order changing, this can actually have a huge impact on how the dollar is functioning and how the dollar is seen. I think there is a danger that the dollar might actually start losing value over a period of time because it might not actually stay the most important currency in the world, because until now it has been seen as the currency of the world trade.
Right.
There have been some ideas in terms of having other currencies be the dominant currency, but it has not happened over the last few decades. So there are going to be challenges to that. When you talk about US is on a very, very weak wicket right now. I think I'm very surprised with the kind of actions that have actually happened there. And as one of the commentators in the program, he said like that flip-flop is going to create a lot of anxiety over a period of investments will dry out, productivity will actually slow down, inflation will rise within the US, and it will have huge negative.
So, Dr. Kapoor, then how is this going to impact central banks who are holding the dollar, as well as institutional investors who are investing through the dollar, and how is it going to impact India as well? I mean, considering that India too holds a lot of dollars.
No, so if you really look at it, like India's the dollar holding or the bond holdings in China far greater than what India actually has. I don't think in the immediate short term, when I say short term, in the next 3 months to the next 18 months, it is going to have some catastrophic effect on India or whatever, because I don't really see the dollar is going to crash. You will see certain adjustments that are going to happen there. But if you really look at it, there is a huge behavioral shift that we have started seeing since December. And what we have seen is that people have actually started buying treasury bills in large numbers. So if you really look at December, I think the number was 2.3 billion in treasury bills were bought, then 67 billion in January, and 61 billion of treasury or short-term treasury bills in February. And what we are seeing is that those US bonds are getting sold. And they have actually started, and what that means is that people are just focusing on the short term right now rather than the long term. But from an India perspective, I think it's a dual layered kind of a thing. When the dollar weakens, what happens is that our exports will actually suffer a bit in terms of saying that exports become a little more expensive, because suddenly from 88 rupees it comes to 80, then suddenly everything that is going out, it becomes a little more expensive for us, because I get lesser number of dollars for the whole set of things. So that might actually create a bit of a skirmish, but this is where I think the government has been preparing for it. I think the Indian idea from 1991, and especially after 2014, has been to focus on improving productivity in India. So if we actually work on that productivity idea, and if you get our productivity numbers right, this will not have a huge impact. I think, very recently,
Right.
What I call Commerce Minister, Piyush Goyal ji had actually made a statement that there could be a chance that Indian, and very recently means about 6-8 months back when he
Right.
said, oh, have a stronger rupee. I think there was an anticipation in terms of saying that if the rupee is stronger, that means we need to move towards productivity, improve our capacities in manufacturing, and that is what we should look at.
Okay, we'll leave it there. Thank you very much, Dr. Amit Kapoor. Thank you for enlightening us on these two stories.